I'm Randy. Unfortunately, I haven't been doing anything technical in the last month, so I did want to share some of the stuff I have been doing that you might be interested in. And first, a disclaimer, I am not a lawyer, nor have I ever played one. But what I do remember is some stuff from some business classes and a lot of recent research I've been doing on single-member LLCs. And does anyone here have a single-member LLC? So you probably know all of this stuff already.
Well, I have a husband and wife LLC, but yeah, that's me.
It turns out that that's the same thing.
Well, almost. There's one gotcha. If you're ever late with filing your taxes, they charge you a different penalty for each member. So
okay.
One gotcha to know. Oops. And it turned out in my case they weren't supposed to charge me anyhow, and I got it abated. But still, they tried.
Okay. Well, I'll count on you guys to keep me straight. Here's a scenario. You have a great idea for an app. You work hard on it, and you're getting ready to take it to market. And it may be awesome, or it may suck big time. You just don't know. But you want to get it on the market and see how it fares. So you think about the risk. The main risk that you would think of is, I'm spending all this time and money, potentially money, developing a product, and I'm not going to make a single cent off of it. That might not be your biggest risk. The United States is very litigious. We have 3/4 of the world's lawyers here. So my nightmare is that I'm going to get an app out onto the market. Something bad will happen. It could be a bug that I didn't catch. It could be that the user misuses it. It could be some hiccup in Android. Whatever. Something bad happens, and before I know it, John Morgan is on my doorstep. Historically, the remedy for this have been corporations. They've been around for hundreds of years, and what they do is separate the liability from the company from the personal liability of the owner. Corporations are very, very well understood. They've been around a long time. What has not been around a long time are LLCs, which developed out of partnerships. The first LLC was formed, was granted in Wyoming in 1982, and by 2004, all 50 states adopted it. It's similar to a corporation and to a limited partnership in that the liabilities incurred by the business itself don't trickle up to the owners, typically. Multi-member LLCs, furthermore, have an additional protection where the liability of an individual member doesn't get translated down to the business. Say one of the members goes bankrupt. He's got a bunch of creditors. He can't pay his bills. The courts cannot go into multi-member LLC and decide to take over that member's portion of it. The worst they can do is something called a charging order, where they will garnish basically the distribution of that owner. However, the courts have determined, and specifically in Florida, that a single-member LLC is not immune from that. So the bottom line is that from what research I have is that a single-member LLC will protect you from upward liability, called inside liability sometimes, but it probably won't protect you from any kind of outside liability. So if you do declare bankruptcy, if you have liens personally on your property, it can pierce the veil. That's the term that the lawyers use. It can pierce the veil, burrow down into your LLC, and they can attach all the assets of the LLC and sell them at auction. So that's as far as I've gotten so far. At least in my case, it seems that the single-member LLC, or like Scott with my wife, would probably be the closest answer right now. I don't want to do a corporation. That would be way too much paperwork, nuisance, reporting, tax reporting, and there really wouldn't be too many financial benefits from it. So that was really the conclusion I reached, and it's something that, pardon?
Are single member corporations more protected?
Again, it's very, very hard to say because the courts look very closely at tightly held corporations. That's where they first decided to pierce the corporate veil, was in tightly held corporations where you maybe have like a family corporation with 5 members. They run it basically as their own family business. There's no separation of the business finances from the personal finances, which is another very important thing that you must do.
Yeah.
So I don't know if there's really any
I kind of figured that the LLC protections, I used to worry about like how
Yeah.
Because
How protected am I?
They weren't well tested.
but I think they're probably sound now.
They are now, I think.
Because when you start looking at some of the EULAs on software and things like
Yes.
that, I'm going to say Facebook or Target or something like that, but I don't know them specifically. But a lot of times it'll say Target LLC,
Amazon LLC.
Amazon LLC, because even though they're a corporation, they own an LLC with the same name
or
that
vice versa
that
sometimes.
does customer-facing business,
Mhm.
and the only owner of the LLC is Amazon Corporation,
Right. Which,
which is a single member. Even though it's a huge number, it's still.
yes, but they have much deeper pockets.
Oh,
They have much
definitely.
more insurance. If you're doing a corporation, the only place you'd have an advantage is if you declared it as an S corporation, so you'd have a single level of taxation.
So I do that.
That's actually what I do as well.
I do
Okay.
an LLC with
Once
LS
you know how to
card.
do the corporate paperwork, you actually get some bit of tax benefit for doing that.
Yeah.
Because as a true LLC, it's considered a partnership.
Right.
All the income is considered, passes through to the members as income. If you do the other approach, you can actually pay yourself as an employee,
Right.
Yeah.
and
take
that's taxed
distributions.
as employment, but you can have a certain amount left over as distributions, and those are considered something akin to capital gains.
It's like a-
That, it's not.
Yeah.
I mean, you have to be careful.
Well, no, they still pass through.
No, they pass through, but they don't pass through as actual employment income.
Yeah,
So you don't pay all the
You
employment
pay payroll
taxes.
taxes. Yeah, that,
You
Yeah, you don't
save
pay
on that,
payroll
but you have to be
taxes.
really careful because, and I hope this is meant to be a discussion, is that the IRS does not give any hard and fast rule about, let me back up a second. You have to pay yourself a reasonable salary
Mhm.
or the IRS
But
will
there's
hammer
no
you. But there's no
definition of
actual
reasonable.
rule, there's actually no written guidance as what's a valid income. So you're like kind of at their mercy.
yeah, but that's
Yeah,
probably in the
no more than-
context of what you're
What's
doing.
that?
No more than 40% in the distribution as well.
Well, that's, I
Okay.
mean, different accountants
That's
and
a rule of
agencies
thumb.
kind of
That's
say
what the
that,
accountants
but
say,
the
yeah.
official IRS guidance is, well, is it a reasonable salary for people in that same situation and thing? Well, really, that's kind of bogus because, Carol might charge $200 an hour for her services. Harvey might charge $40 an hour, which is reasonable. If he then charges himself or pays himself something close to what would be 40 hours, is that unreasonable because Carol can do 5 times as much? I mean, there's certainly a gray area there. So my rule of thumb is something akin to about half, about 2/3, depending. And usually what I do is I say, well, about the bottom salary you can probably get away with paying yourself in this area for as a developer is probably something like $45,000 a year. So, which is kind of my working rule is like, all right, first that bit's salary, and then everything after that is distributed.
That's actually a magic number because it puts you in the 15% tax bracket, or in the 15% tax bracket, and you don't pay capital gains at that tax bracket. So, which
Right.
you can also
Right.
get capital gains from your from your LLC with S corp election.
Right.
So 3 tax classes for what you're bringing out of it.
And that's back where even if it's a closely held, there's still some consideration to how many members you have. So if you yourself, now that's kind of gets whatever, because
And the
whatever.
percentages
But
of
your
it,
brother is all right. Now you have 4 people sharing that extra distributions, not just you, right? Does that make sense? So that whole, how much should I pay myself, how much should I take as distributions? Well, if you officially have 3 different people you're distributing to, now, you know, you kind of have diluted that. You have diluted.
I ended up getting advice from a family member who's sort of an aggressive CPA,
Okay.
and his nickname is Honest Tom.
But emphasis on
And he used to always say, if I'm not getting audited at least once every few years, I'm not saving my clients any money. And the IRS audited him one year, and they say, you don't pay yourself enough money. And he's like, oh, I pay myself exactly what I'm worth. And they're like, but you don't pay yourself anything. He's like, I'm a really shitty CPA. I am astonished that people and he was pointing out, and he was like, there is no rule. Like, he was saying it's all basically on how much you can stomach those stress. So if you really don't want an appointment with the IRS, like, there's those rules.
Stay within
Yeah.
that, right?
And the same
Stay within
rule
the
is
20.
even if you get audited and get a penalty, if you can get away with it for 15 years and you do better than 1/15th penalty,
Well, that's what he used to always say.
you're
was
kind
like,
of better off in the long run.
he would say, if I screw the IRS out of 10 grand every year for 10 years, and then I have to, but the 10th year they catch me and I have to pay a $1,000 fine, I came out way ahead.
Yeah, but you're not sure what that fine's gonna be, or whether
Well,
it's
no,
doing
but
something
he said,
worse.
like, there are certain things that you can do with actual set on the book fines. And he said, and if you know what those, that was his job, to know that
Okay.
stuff, but
Right.
obviously that doesn't apply here, but it was just
Well, the other part of that
the
is
mindset.
if you're like me and cheap and you know how to do your own taxes, you have to count and do. And when you were a LLC and you were doing the partnership 1065, you do that one year, you pay how many hundreds of dollars for the accountant to do it, and then the next year you just kind of copy what they have. And if everything's pretty similar, you should have, you know, other than they change the form a little bit every year, you should have almost the same thing. So you kind of you get a comfort level. I've done it right. And then when you switch to the other, you have the accountant do it the first year, and then next year you do the 1120S.
Yeah.
And you're like, oh, my numbers came out all right, you know, and you just tax
Yeah.
right over. So the other part is you can save, you know, $400 to $1,000 depending on which accountant you have and what they do each year. So you factor that into, okay, and then you have the audit. You probably should go to an accountant, you know, and now you got to pay them, you know, $1,500 for a forensic, you know, or whatever they call
The
it.
problem I had was that most CPAs suck.
And I found
for
that
small
true too,
businesses.
that they pretty much use all the stuff you put in anyhow, so
They use
there
a
was very
program
little value add for
Sure.
me.
It may ignore half of what you tell them.
Yeah, the thing is, that depending on how they get the information, they might just have like a bag full of receipts.
No,
and tell them,
I can
figure it
put
out.
QuickBooks and whatever, and then the things, when I say, well, I wasn't really sure how to categorize this thing or this thing and this thing, they're typically, and this has been more than one account, including one he referred me to, which was a real poser. It's like, wait, that's why I'm hiring you, and you're giving me grief about asking that question? I mean,
The problems that I would find were like CPAs would just do your taxes like as though you were doing like in TurboTax. You know, I'm like, I don't want TurboTax. I want the CPA that comes to me and is like, oh, I noticed you have 2 small kids and that they go to private school. Have you realized that if the business pays for their school as an employee part to you, that you know you might actually save some tax in the long run? You still have to pay some tax on it as an employee benefit, but you'll save like $500 a year.
I didn't know that.
It's not exactly that, but there are things like that. And the CPAs, most of them are either, the thing that I've noticed is there's like the name on the door, and then there's all their assistants. You meet the name on the door the first day, and the assistants are the ones that do all the work, and they don't know any of the tricks. So
That's how it works largely.
if anyone knows a CPA that's different than that, I would love to hire them. But
Well, I had one that did that, but they weren't the
But they went to
$400 a year, they were the $1,200 a year. So, you know, and this was one that you gave them the QuickBooks, which was rather well done, you know, and there was very little work really, but she didn't save me $1,200.
Or you can marry one like I did.
You can do that too. What's worse than accountants are accountant spouses. No?
Depends on the day.
No comment.
But when I first started looking at this, I wasn't looking at it so much from the tax perspective, even though that's a consideration. I was looking at it more in terms of the liability immunity, especially with product liability. I don't think I've ever seen any product liability insurance for software.
I have it. It's,
Oh, yeah.
it's errors and omissions insurance.
Yes.
Okay.
I had to carry it for my LLC to do a corp-to-corp gig. And
Okay.
Yeah, occasionally they have you do stuff like that.
Yeah.
The other thing that's interesting.
My private insurance company, I called them up and told them, I asked them for a policy, and they quoted me a policy for a business, and they knew that I did software.
Yeah, what did they, what kind of ballpark was it?
I don't remember, it was really expensive, and I didn't have to have it, so I didn't get it.
Okay, because I've always worked for hardware-related companies, so you're putting your insurance on a piece of hardware that happens to be running firmware in it with some software around it. So I didn't know what you do with pure software
I think
businesses.
for most of
I
us,
think it's kind of,
you know, again, it's not a lawyer thing, but for most of us, I don't know that there is a lot of liability for what we do. Now, if
It all depends on the context.
Now, if you do a thing, and let's say you're doing a dating site, okay, now somebody might get killed by their date, now you could get sued, but most of us that are doing,
or you just did
contract
something
work
so
for another-
stupid and leaked the entire database to the internet.
right, or something like that, but again, if you run each of your, when you get into weird selective clients, it's almost behooves you to have a separate
Right.
LLC for each client, I mean, if you're that, but the veil doesn't go, as long as you're doing good stuff about
Practice due diligence.
keeping all your financials separate. I know you can do some overlap, and that's the way you do through the petty cash thing, or you know, if you accidentally use the wrong card, oh, you just mark it as petty cash. But you got to really minimize that stuff. But for the most part, the productions, if you have your professional stuff done through the LLC, you're personally, the only thing that's risky is your LLC. But LLCs, by nature, the money all passes to you anyhow at the end of the year, right? So there's very little.
The LLC's, my LLC has no money, so some work.
I mean, my
Your
LLC
assets are a
has
couple
some just because I
computers.
haven't distributed it all, but if I was worried about some
Yeah, I guess
liability, I would make sure to
technically
remove
owns my
that.
laptop.
And then
Yeah.
it's not their money anyhow. So for a professional software thing, you don't have a lot of equipment owned by the LLC. You might have a computer or two, but you don't have a lot of liability there anyhow.
Not enough to make it worth hiring a lawyer.
And not enough that anyone would sue you because they look and says, what assets you have? Oh, you've got some 3-year-old laptop in it. I'm not going to
Or
bother.
the source code for an app that might generate 1,000 downloads, 1 million downloads.
If you have an app that does 1 million downloads, depending on what you're doing, okay, you just made $100 that month, right?
Yeah.
So,
Well, if you were gonna do apps, and let's say, it only costs what, like $130 to start an LLC, so per year or something like that. So you could have a separate LLC for your own personal apps
Right.
versus your business to keep the assets separate.
Well, I'm working on a safety app, so I'm getting nervous about it.
I've worked on stuff where like machinery moved around, and
Mhm.
if I had been stupid about how I programmed it, it would kill someone. But
well, Harvey and I worked on a place we coded nuclear bomb detectors, and
Oh, just
and we had things, but it was more of a personal liability that I exposed somebody to,
Yes.
a minor nuclear sample, but.
It's just one uncaught exception away from whatever.
yeah, we don't use it.